Okay, so very good evening to all of you. Prema, I believe you're mistaken. So, okay, so anyways, what we have done in the last class is just a recap before we go ahead. So the first and the foremost thing, we started with GDP. I'm just recapping it because those who have joined today, they should know about how we have progressed over the time and where we are going to take it forward from where, okay? So the last classes we have, the very first class we started with GDP. What is the significance of national income accounting? And then we switched over to Keynesian theory, where we had shared the concept of equilibrium, inflationary gap, deflationary gap, and then we had shared about the condition of equilibrium, then the concept of multiplier. Followed by that, we had shared about public finance. Okay. Now today we are going to talk about public finance. When we had discussed in the last class, we had shared about some terminologies with respect to allocation of resources, efficient allocation of resources, redistribution of income, and macroeconomic stabilization. That is about the role of the government. And this was given by whom? Musgrave. He's considered as father of public finance. And what we had shared till now, we had shared about that why the government needs to intervene in the market. So today we are going to take it forward from here, that why market fails and what is the need of government to intervene and what is the role of the government. And we have shared that Adam Smith shared about role of the government was confined to what basic things. It was about law and justice. Then it was about taking care about basic amenities. But as the economies are changing, the role of the government has changed. And we have shared in the last class how during COVID, government played important role and how during for services, like whether you talk about startups, whether you talk about Skill India, whether you talk about new education policies, the government plays very important role today. So we are going to take in this class some important topics which is related to that market, why market fails in certain segments and why government has to cater in that segment. Okay, so market failure, what are the reasons of market failure? Why government should be there? What category of products are there? And what are the concept of externalities? So as we'll go ahead, you'll come to know about the terminologies. So the core of this class is about market failure. Market failure, if in simple terms you understand that what can be the reason of market failure? If I say, if you see this terminology here, it is about market failure. Market failure basically, what defines market? Market is defined by consumers and producers. Now let's say that consumer wants goods, but producer is not willing to supply. Why the producer may not be willing to supply? Because the price at which consumer is asking for, let's say it's about 10 rupees. But the producer is not willing to supply 10 rupees. But this is a basic necessity good. In that case, if producer is ready to supply consumer, for consumer it is a basic requirement, then in that case, who will take care? Government will take care. And this is the case of market failure. Market failure can be like this, or it can be other possibility like that, that producer is the sole producer. And that producer starts dictating in the market by quoting high price. But it is a necessity good. Then in that case, government will intervene. So government plays role. So market failure leads to government intervention. Okay. So we'll be sharing that what is the role of the government. Contagion basically means that, like you see COVID. COVID is contagion, Shivam. COVID contagion, how can it be contagion? If one gets affected, its impact is on another. And it spreads to number of people. That is contagion. For example, 2008 crisis which happened to one segment of people and the impact was on n number of people. Contagion. Okay. So contagion is that. Okay, so today we are sharing market failure. So what all we are going to share in this class is about number one, what exactly do we mean by market failure? What are the factors which leads to market failure? Number three, that is market failure leading to loss of welfare of people? if it is loss of welfare of people, then is government going to take the charge through catering public goods? And how public goods are taking care about reducing the probability of market failure. Then if government is going for public goods, is it leading to misuse of those public goods by public? That is about free rider problem. So something when you get free, something when you get at a very subsidized price, how do you use it? You misuse it. That is about a free rider problem. How is it related to public goods? So that's the next thing which we are going to share. Then the next concept is about incomplete information. So sometimes it happens that there are different set of players. You see in the market, basically we have shared there are consumers and producers. But if producer has some information and that fellow doesn't want to share it with the consumer and want to exploit the situation, that leads to incomplete information. So in such a scenario where a producer knows about something over and above and doesn't want to share it with the consumer, then in that case, what will happen? There will be lack of information. So consumer can be cheated in that case, or consumer can be exploited in that scenario. It is happening because maybe the consumer is not well versed with the market. Maybe the consumer is having half information here or incomplete information here, the benefit of which the producer wants to gain. That is known as incomplete information. So it can be from both the perspective. So for example, I say you're an insurance company and I have come for insurance and I'm hiding something from you and you are not able to detect that or you are not able to find it out, then in that case, it's a fault of a consumer, isn't it? So consumer is hiding information. So it can be from any front. This incomplete information leads to market failure. We will be sharing different scenarios and the probabilities which leads to market failure. Then if there's a market failure, government need to intervene. Why the government intervention is required? To correct the market failure so that the consumer should not suffer, so that the country should not suffer. And if you talk about a global front, then in that case, the world should not suffer. So different countries, they go for taking different measures with respect to this. Okay. Market failure can be hoarding and wrong advertisement. Absolutely, absolutely. So you see the case of market failure, misinformation, I would say incomplete information. So fair and lovely products saying that you use this cream and you'll become fair. Is it practically feasible? People go for using. Some companies, they promote that if you use this particular product, you will become slim. These are all incomplete information. Some financial products are offered in the market. They say that you buy this product and we'll give you 16%, 18% rate of return. But people buy it without realizing that will they be getting this much return in a short span of time. So incomplete information leads to market failure, whereas one player will definitely suffer because of the lack of complete information. Deteriorating outlook basically means, Sadev, that what you perceive. For example, I say that because of COVID, people start perceiving, like I'll take example of Sri Lanka. Okay, Sri Lanka, you know what's happening in Sri Lanka. Sri Lanka inflation is very high. They are running short of oil. They are running short of food. So India has catered to them. India is helping them in terms of oil supply and other things. So basically, when you see such a market scenario where things are not going in a right manner, and that leads to continuous downturn in terms of perception of people, which leads to deteriorating outlook. And this leads to what? When you perceive that your economy is not doing well, GDP will go down, inflation will increase, people will not be having job. So deteriorating outlook leads to what? People will not invest in your country, your currency will depreciate, inflation rate will increase, country's debt obligations will increase. So this is about, okay? Yes, absolutely, Red Bull, Shubham. They say that you gain. Is this? Yes, definitely, Prince. Whatever we share in each and every successive class has some linkage with what we have shared in the last classes. That is how it is planned. So chapter 1, 2, unit 1, chapter 2, unit 2 chapters, followed by unit 2, 2 chapters. So it is all interconnected, isn't it? You cannot say that we are working in silos. What I'm sharing today has no connection with what we have shared in the last class. So all concepts are interlinked. Okay, so we are going to start with market failure. I hope the font size is okay. You can see, all of you can see this. Okay, so we are talking today market failure first and the foremost. What is market failure basically? Market failure basically means that okay, so market failure is basically is a situation in which market outcome, what can be the market outcome? Market outcome can be in terms of price, it can be in terms of output. Okay, so there are two outcomes of market are inefficient. The market outcomes are inefficient. Inefficient, maybe the price is too high, maybe output is too low, maybe the price is too low and there is overproduction of the good. So these are inefficiencies which may lead to underutilization or overutilization of resources. That is known as market failure. Okay, market failure describes a situation in which market outcome can be in terms of price, it can be in terms of output, which are inefficient, which leads to maybe underutilization of resources or over exploitation of resources. So when there's a market failure, then government has to intervene because this is leading to inefficiency. So to correct the inefficiency, government has to intervene. Okay, number one. Number two, market failure can be from the demand side, market failure can be from supply side. Demand side market failure can be that the consumers, for example, waste disposal. Waste disposal is that consumers are not ready to pay for waste disposal. If they have to pay the price, they will not go for disposing of the waste in the manner which is. They feel that waste disposal, why should we pay the price? So this is demand failure, demand side failure. Waste disposal. People don't want to pay the price. They feel that it has no value attached to it. So the kind of service is pure air. We think that air is our birthright. And if we are polluting it, we are not liable to pay for it. Because God has gifted us with air, so why should we pay for it? Tree plantation. If you tell people that you have to plant tree and you have to pay the price for it, nobody is going to do it. Or very few people will do it. So that is about the demand side market failure. Okay. So in such a scenario, when it is very, very important, but still people are not ready to pay price for it, then government is going to take the charge. Okay. So that's why you have MCD bodies. Municipal corporation bodies are there, which takes care about this because people are not ready to pay for that. Then supply side market failure. What do you mean by supply side? It is from the producer perspective. What can be the problem in the case of producer? So producer like polythene bags. Okay, so supply side market failure is that you tell producers you stop producing polythene bags. Why will they go for stop production of the polythene bags? They say that we can produce polythene bags at 50 paisa. And we can sell in the market. There is huge demand in the market of polythene bags. Low quality polythene bags. Why should we stop production? But it is hampering the economy. It's hampering, once it goes in the earth crust, it's not going to dissolve and it's going to remain there for decades. So you are making adverse impact on the soil health, but nobody's bothered because the price quoted is very low. So they lead to overproduction. Supply side market failure. Chemical industries, pharma industries, others which are close to the river bank, which are releasing all chemical waste in the river. If you tell them that for releasing that waste, you have to pay the price, they don't realize. They keep on disposing of that waste in the river because they are not liable to pay the price for that. And their cost of production goes down and that makes them to produce surplus. So that is about supply side failure. Okay? Acha, zoom kar do. Okay. ठीक है? Is it okay now, Shivam? Okay. So I hope this is clear to all of you. The concept is clear here. कि demand side market failure क्या हो सकता है? What is the supply side market failure? So demand side will be from the side of consumer. They feel that it is not worth paying, but it is very, very important. And in that case, government has to take the charge. Because somebody has to intervene, no? And it's supply side, when suppliers feel that why should we pay the price for this, and that leads to overproduction or underproduction. Okay, so that case, that is market failure. So market failure is clear. Number two, what are the factors which leads to market failure? So market failure can be market failure, Karthik, in simple terms means that either the price is too high, which is not worth paying for that product or service, or output is too low. Because if output is too low, in that case, because you feel that you should curtail the supply in the market, and you are capable of producing more, but you are producing less, or any kind of variation from the normal scenario, that is known as market failure. Okay, Karthik. Rational for government intervention. Rational basically means here rational, the objective, the reason behind. What is the valid reason behind that government should go for intervening in the market? Okay. Up to theek hai, Milton. The size is okay of font, I believe so. So here you can see market power. Okay. So when we talk about, this is one of the reason for failure, Karthik. Okay. So what is the reason for failure? Market power. What happens when I'm a single player? So what is going to happen? I'll have dominance in the market. I'll have dominance means no other producer is there. What will I do? I'll charge high price. There are less number of players, less number of producers, that may gives them higher market power. Higher market power leads to what? Quoting high price, low supply, controlling supply. Is it efficient way of working? No, definitely not. So they are working at less than the optimum level, inefficient level of production, because they are controlling supply to escalate the price, market power, to gain market power. One. So what's happening here? The price quoted is greater than the marginal cost. Marginal cost, आप समझते हैं? What is marginal cost? Marginal cost is change in total cost with an additional unit of good produced. If you produce one more unit of good, one additional unit of good, then in that case, let's say your cost of 100 units of good, your cost was, let's say, 1,000 rupees or 100 rupees. Okay, 100 units of good, your cost was 100 rupees. Now you have produced additional unit of good, one more unit. So you have produced now 101. So one additional unit of good you have produced. So this additional unit of good, the cost goes up to 110. So what is marginal cost? 110 minus 100 divided by 1. So the marginal cost here will be 10. Now let's say your cost is 10 rupees, but you sell at 100 rupees. How can you sell at 100 rupees? Okay, sometimes it happens that producer will say, no, we don't want to produce only. Despite they are capable of producing, despite knowing that they can produce, but still they not produce because they believe that consumers are not going to pay that price for that good. So why should we produce? So they do not want to produce. That's again a market failure. Okay, so market failure occurs. Font size नहीं दिख रहा. Okay. अब ठीक है. to supply side market failure. Supply side market failure, I've given you such a good example that when you say about producer going for production of, let's say, polythene bags. Okay, so polythene bags hote hain, cheaper ones. I'm not talking about the one Amazon is giving. What you get it from the local vendor. That you get at what price? You get normally free, max to max 50 paisa cost karta hoga to the retailers. So all sabzi walas, everyone is ready to supply that bag because they are getting from the producer at such a low price. But government has banned it. Government has banned plastic bags, but still people are getting it because producer are producing it. Why producer are producing it? Because they can produce at such a low price without realizing that production is hampering our earth crust, is hampering our environment, but nobody is bothered because the cost is too low. So producers are producing, sabzi wala is getting, and the consumers are using. It's a supply side problem, no? If there is no supply, then how consumers are going to have? So you see, when you go to buy the products from Marks and Spencer, when you buy from those Pantaloon and other places, they say that you have to buy that paper bag, and that will cost you 10 rupees. So once you see that you have to pay the price for that 10 rupees, then in that case, you will think twice. And if these polythene bags are going to cost you 100 rupees, who will buy those products? Nobody will buy. But it is a supply side failure because the polythene bag is available at such a throwaway price. Everybody is ready to buy it without realizing that what impact it is making on the economy. So this is leading to problem in the country. Similarly, people go for supply side failure in terms of, I've given you example about industries. Another example, if you see some roadside, those local buses, these local buses, what are they doing? Local buses, when you go for those local buses, they emit a whole lot of pollution. But they are not bothered about, because it is not hampering their number of customers, because you sell tickets at such a low price to board that bus. So they are not bothered. Customers are happy, producer is happy. But is it a good strategy to board that bus, which is offering you such a low ticket, but it is emitting a whole lot of pollution? Nobody is bothered. Supply side failure. Okay. So people consuming crackers, burning crackers, because they enjoy that noise, that pollution, that they enjoy that lights, because the crackers are available at a price which they can afford to buy, but it is hampering the environment. Market failure. Okay, so these are the different concepts of market failure. Okay, it is clear in laptop. Good, Prince. Okay. Okay, Rajiv, thank you so much. Thank you so much for telling me this. Okay, without zooming it. Okay. So you can see here now, so what we are talking about next component is, so government need to intervene in the case of when people exploit the situation. So externalities, what are externalities? Externalities is, I'll tell you simple example. It is your exam time and you have paper of your, this Paper-8B. Okay, and it's November and you have to appear for the paper of this 8B paper. So let's say you have your paper after one day and you are preparing, and close by to your house or wherever you are staying, somebody is playing music at a very high pitch. Okay, so you are a student who is preparing for your exam, which is tomorrow, and we are in the month of November. So you are giving November 2022 attempt, intermediate, and you are appearing for Paper-8B, and you want to study. But what's happening here? sorry, you are student B. Okay, you are student B. And this fellow A is your neighbor who is playing music at a very high pitch. So the music played is at very high pitch. The fellow is enjoying, but you are suffering, no fault of yours. You are not able to concentrate because that music is disturbing you a lot. And you are not able to concentrate, and this may affect your performance. What's your fault? Simple fault of yours is that you are staying next to the fellow. This is negative externality. Externality basically means A is producing, B is suffering, or B is suffering, or B is gaining. A is producing or A is consuming. Another example of externality. So there's a park, and you have gone to the park for a walk, and you see other person standing over there is smoking. And when you pass by, that person A is smoking, and you have become a passive taker of it. And every time when you cross this area, you inhale that smoke, and you may get impacted in terms of your lungs. Sorry, your lungs may get affected adversely. This LUN. Okay, so what happens here? Your lungs get affected. Externality. Consumption externality. Production externality is something which can be positive. It can be positive, it can be negative. So what is externality? Consumption or production of A makes impact on B. Okay, so that is externality. If A is consuming something, if A is producing something, but B is getting impacted, that is externality. Okay? Any good become demerit good from playing music at audible level and then at a very high level. Externalities means benefits or cost, which no one is, where there's no price attached to it. That is externality, normally in social cost, which we'll be sharing later. Okay. So externality is clear to all of you. It can be positive, it can be negative. So for example, we say, you see, today the trend is that organic goods are good for health. So what's happening? Some people believe that jowar, bajra is good for health. No. So what's happening? People have started buying these products. Now, since consumers have more and more number of consumers, elite group of people believe that it's good for health, so they have started buying these products. Now, jowar and bajra was something which was basic diet of poor people. So what's happening? Since rich people have started buying more and more, and they can afford to buy, and they've realized that it is good for health, so they have started buying more and more. What will happen to price of jowar and bajra? It will increase. Now, since the price increases, those poor set of people, those who were buying it as a staple diet, they cannot afford it today, because the market will be going towards whom? Towards those people who are paying high price for that. So this is something which leads to adversely impacting the market, externalities. So what is the fault of poor people? But since rich people have started buying more and more, and that is why poor people are deprived of it. Negative consumption externality. Okay? So price, basically, externality is clear to all of you. If A is producing and B is consuming it at a price, no, Tanvi, then it is not. Suppose I'm a producer, you are buying it. We are saying that you are not consuming it, still you are suffering. That is why I said आपकी क्या गलती है if your neighbor is playing music at a high pitch? आपका एग्जाम है तो, but you are suffering. So A is using it and you are suffering it. Okay. So price, this is the concept. Now, so what we say that basically right price should be quoted for the good. That's the core. If the price is less, just the polythene bags may, the price is too low, it's bad. But certain goods which are necessity goods, where the price should be high, price should be low, there the price quoted is high. That is also bad. So price is a determinant of production and consumption. If the price is as per the production and consumption cost factor, then we say it is efficient utilization of resources. But if the price is higher, too high or too low, then there is some problem. So there are two players. One who is producing that good, originating party, and the other one who is who is creating the product, and the other one, third party, which is no way related to this, but is suffering. So sometimes they call externalities as spillover effect. They call it as neighborhood effect. They call it as third party effect. Because A is producing, B is consuming, why should C suffer? A is producing polythene bag, B sabzi wala is, or we the consumers are consuming. Why the earth should suffer? Why other people should suffer? Third party effects. Spillover effects is the impact which is on a larger set of people. जैसे आपने देखा, people not following COVID protocol. So people not wearing mask, people are COVID positive and they are roaming in public place. So A is अच्छा अब ठीक है okay 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 so this is the concept. So we have shared if in the question paper it is written spillover effect, neighborhood effect, third party effect, so you should get it that it is about externalities. Okay, so just in the case of this COVID is one example. Another example can be in terms of spillover can be positive, spillover can be negative. So people, those who go for promoting green, those who are going for promoting saplings and going for green, then in that case, what's going to happen? Country will be more green, you will get fresh air, you will have long life, you will have healthy life, you will remain happy. So somebody is growing trees and you are gaining benefit. So spillover effect can be positive, it can be negative. 2008 global financial crisis, spillover effect was negative to other countries. So somebody did mistake and others had suffered. Okay, so this is the concept of externalities. I hope it is clear to all of you. How positive externalities cause market failure, Shivam? Positive externalities, when they are there, then in that case, they may reduce the production. Corporate, they do not want to produce only. Where there is a positive externalities, waste management ka kitna positive externalities hai? But why private players are not there? It's only government which has to take care about it, okay? Because positive externalities may cost is high. But people are not ready to go for doing it. They believe that why should we do? Sometimes they believe that the price is, why should we pay price for this? जैसे green में आप देखिए, people don't want to go for it. Why should we buy plants and go for it? And the other set of people believe that the cost is too high. Producers believe that cost is too high. Why should we go for it? Okay, absolutely, Jaspreet. आप decide करोगे बेटा ICI classes are positive externalities or not. So definitely from my side it is positive externalities because so many students gaining benefit, isn't it? So definitely ICI classes are, आपका study material is also positive externalities. So ICI board has prepared that study material and students are gaining benefit. isn't it? And once you gain benefit, you pass it on further to other segments also. कल को आप chartered accountant बनेंगे, then you will give your services to others. You will become advisory. कितनी companies का benefit आप करोगे, country का benefit करोगे. So those who are chartered accountant, they have helped in terms of GST, isn't it? They have helped in terms of IBC. So this is how you give benefits. So these are externalities, you can pass it on. So these are spillover effects, third party effects. Your contribution in terms of GST is helping so many people today. Country को कितना benefit हुआ है GST tax proceeds से. So if chartered accountants would not have helped, how this benefit would have been derived by country to that level. So this is spillover effect, okay? So I hope it is clear. So market failure is one, externalities other. These are the market power is one, externalities other. These leads to what? Market failure. And if there's market failure, then government has to intervene to bring it back on the track. Basically, if we say in economics, efficient allocation of resources. Okay. So externality can be one direction, externality can be two directionals. It can be one directional, unidirectional, or it can be both ways. So if we say it's both ways, A's action is impacting B and B's action is impacting A. Any example if you want to quote about reciprocal externalities? So let's say that in a market, there is one industry. This is a firm. Okay, so this is a firm, and this is a firm that is a supplier, and this is a buyer. Okay, so what happens here? This firm or the producer is producing. When they are producing, creating noise pollution. Okay, so they are creating noise pollution because the way they are producing is leading to high decibels and creating noise pollution. And this buyer who's buying this, or the other fellow who is here, so this, because of noise pollution, this fellow is getting affected. At the same time, this buyer close to the industry is disposing of all waste. Whatever is the waste, they are disposing of here. So the buyers are disposing of waste here, which is getting accumulated close to the industry. So industry is getting affected because of the air pollution. And this fellow is emitting noise pollution. So because of the noise pollution, the buyers are getting affected. Two-way, reciprocal. A's impact affecting B and B's impact affecting A. So that is about reciprocal. It is two-way. One way would have been that this fellow is emitting noise pollution and this buyer is suffering because of that. That is a one way. So unidirectional and reciprocal externalities. A is also creating problem for B, and and B is also creating problem for A. So this is clear. You understand what is the difference between positive externalities and negative externalities? Negative B weight taxes, absolutely. Our cost of necessity increases, Raghavan, absolutely. Difference between negative production externalities and negative consumption. Abhi to aapko bataya, production is from the producer's perspective. Production externalities from the production perspective, and consumption is from somebody smoking in a public place, somebody not wearing mask, not following protocol, is consumption externality. Somebody going for producing goods by hoarding and supplying at a very high price, production externalities. Okay, so negative externalities aapko samajh mein aa gaya. Negative can be production externality, negative can be consumption externality. Similarly, positive can be production externalities, positive can be consumption externalities. If producers, they go for promoting ethical culture in the organization. Just say you have seen in the case of Tata, Taj attack, which happened in Mumbai. Those Taj employees were trained in such a manner that they were not bothered about their life, but they safeguarded people over there. And because of their culture, because of their training, that helped so many people. So this is production positive externalities. Consumption positive externality can be in terms of that you gain knowledge, and that knowledge you pass it on to people free of cost or at a subsidized price or in a generic manner, very generously. That is consumption externalities. You follow yoga, and others, they see you doing yoga, and that makes them to follow that. Since she or he is practicing, so this fellow is so fit, so I should also start. So they ask you, and then they start following. Consumption positive externalities. Somebody indulging in wrong practice, especially you youngsters, when you see somebody going for something, getting in a short span of time, getting money, involving in unethical practice, that makes you feel, wow, this person is getting in such a short span of time, let me also follow. Negative consumption externalities. Peer pressure is there. Somebody is smoking, and that makes you also go for smoking. Negative consumption externalities. Okay, so consumption externalities can be positive, externalities can be negative. It can be from the production perspective, it can be from the consumption perspective. So negative production externalities we have shared. Pharma company producing drugs which are essential, but they are disposing of all their byproducts in river. And since it gets disposed of in the river, byproducts which are very harmful, it gets dissolved in the water. The people on the other side of the river bank will consume that water, they'll drink, and they'll have a respiratory problem. And fishes in the river will suffer because of this. And those people who are involved in fishing business, they will lose their business. So because of that, pharma company, which is generating chemical waste and disposing of in river, that is resulting in what? Production negative externality. Okay, so this is production negative externality, impacting other set of people staying across the river, and people, those who are relying on fishery and other fishing activities and other. Even tourism gets affected, isn't it? So people, those may come for boating and others, the river get affected because of that. The water may go down or may become like a bad quality, and because of that they may suffer because of this. Okay, so rapid urbanization is also negative externalities. So positive production externalities, what can be production? I've already given you Taj example. That's the best. What can be the other example you can quote for positive production externalities? Any other example of production positive externalities? Which example you have given, just Preet? Absolutely, absolutely, Prince. Paper leakage and producing polythene bags are, yes. Yes, you're right, absolutely right. So some people indulging in wrong practice, those people who cheat, and they score marks, and some people, they work hard. What is their fault? Since they are working hard and they are doing it by themselves, they are working so religiously, but they score less as compared to those who are cheating and indulging in wrong practice. So that is one component of consumption externalities making impact on other. हम अभी positive production externality की बात कर रहे हैं. So positive production externality I've already quoted. When there was attack on Taj, you remember? And at that time, Taj employees, they had an option to leave from that place, but they were very much there and they were safeguarding people, and many Taj employees, they lost their life because they were groomed like that, they were trained like that. उसी तरह से आप देखिए ISRO is doing so much research, and this is benefiting so many people. So through ISRO satellite, people come to know about natural calamities, people come to know about how to take care about environment, what is the impact, how to like soil texture and so many other things. People are doing research based on that. So this is again production positive externalities. Okay. So example, ISRO कितना अच्छा example है of production positive externalities. So they are contributing and this is helping. Negative consumption externalities can be, we have already shared, people smoking in public places. Yes, people burning crackers. It is extremely bad. But people don't realize this. They consume and they make impact on others. People traveling on the road in a very rash manner, and that resulting in accident and other people suffering because of their casual approach is negative consumption externalities. So consumption externality can be negative, it can be positive. Okay, indiscipline, this is given in your book. So indiscipline action, act of a student, but I have made it modified with respect to virtual class. So virtual class, some students, they try to write nonsense and then they try to disrespect the faculty, which may go for deviating from the point, and because of that, n number of students, they suffer. This is also, but some students, they go for complimenting. Some students, they say that they keep on encouraging the faculty. That is a positive consumption externality. So it can be negative also, it can be negative also, positive also. Yes, Jaspreet, absolutely right. I'm asking, you're answering. And reciprocal externality is absolutely right. Research papers given for, say, any production entity, absolutely, Karthik, right. Production externality. So firms which do, best example is COVID vaccine. COVID vaccine is what? Production, positive externalities. How many people have been benefited because of that? Definitely. Isn't it? So production externalities, consumption externalities, positive consumption externalities can be COVID vaccination. So you do vaccination and safeguard others. Other can be that you remain fit, you take care of your diet, you remain fit, you practice yoga, you take healthy diet, and when you get a job, you work over there, you remain happy. You remain happy because you're taking good diet and you are healthy and you're feeling up, charged up day all throughout the day. That means you are spreading positivity among other employees, and other people also start feeling good about it. You start complimenting people because you yourself are happy. So happy people make others happy. Sad people make others sad. So this is can be positive consumption externality. Somebody following ethics. So if you're honest, you're sincere, you're disciplined, you're ethical, that means your organization will grow. Organization is going to grow, means investors are going to gain benefit. You understand? So many people are getting benefit through that. So consumption externalities. I hope आपको clear है सबको. Okay, so all of you understand this. Absolutely, Yukti. Following traffic rules is so some people they do take undue benefit. No traffic wala, police wala is there. Chaliye red light cross kar liya. And when you go for this, you may bang into another, and that results in loss. The other fellow who's on the right track, but you have broken the law, and because of that, other has suffered. There are many examples you can quote. Okay, so private cost and social cost. This is the concept which is very, very important for you to understand. So what is private cost? So let's say that a producer, production cost is okay. So let's say that the production cost for the producer is rupees 10,000. This 10,000 includes labor cost. This includes raw material cost. Okay. This includes cost for machine repair and whatever it is about, all machine cost and equipment cost and everything. This includes his rentals, whatever it is about. Lease or whatever it is about. So all cost is included. This is which cost? private cost. Okay, so production cost is private cost, which you talk about. And what is about this cost here? Social cost. Social cost is this. Let's say this producer is in the segment of let's say in the segment of chemicals, okay? So they are producing some chemicals which are required by industry. Okay, so these chemical byproducts are very harmful. But these byproducts, they are emitting in river. Now, because of this emission in river, byproducts had dispersed in this river, and because of that, some people have used this water on the river bank. So let's say these are the people, those who have used this water, and they have suffered. This is the cost to these people of this firm. But when the firm is going to calculate cost, they will never accommodate this cost. Are you understanding? This is the cost to the society because of this player. So that is the social cost. So private cost is the cost. This is 10,000 rupees. But because of this, many people suffering and they have to pay to the hospital, let's say, bill of 15,000 for getting treated. Now this 15,000 is the cost for these people, no fault of theirs. Ideally should be taken care by this fellow who is in chemical industry. So what is social cost? Social cost is the cost incurred on society, not directly involved in the production process. These people are not involved in production, but still they have to pay the price. So those set of people, those who are producing polythene bags, they are producing here, so that is the cost of their in terms of production of polythene bags. But those polythene bags which are used by certain set of people and have been thrown here and there, and it goes to soil, earth crust, and there it remains for decades, and future generation, they are going to suffer. They will not get that fertility of the soil, farmers will not get fertility of soil, production of crops will reduce. Production of crop reduces means price will go up and people will suffer. Social cost. Okay, so social cost is what? Social cost is private cost plus external cost. External cost is what? External cost is cost incurred to A, production, and B, suffering. A, consuming, and B, suffering. External cost. So that is social cost is private cost plus social cost. Private cost is the cost to me. So somebody going for consumption of cigarettes or liquor, then in that case, you pay the price for that cigarette packet is your cost. But you smoke and you affect other people is the external cost. And the total cost, sum it up, when you calculate your cost of buying cigarette is this only. But this external cost, you are not taking care about that. That is borne by society. So that is the social cost. Same is with the producer. We have taken example of chemical industry. Okay, so if there is no external cost, then the private cost will be equal to social cost. That means there will be no externalities. Same happens in the case of social benefits. So social benefits are benefits where private benefits is that, for example, I am teaching you, it makes me happy to be with students. That is my benefit, private benefit. That's why I want to be with you, because I like to share and I feel happy when I'm with students, private benefits. What about positive externalities? Many students are gaining benefit. Not only this, those students, those who clear their intermediate, they post on LinkedIn and they post on so many places, which aspire other students also that if A or B can do, why can't I do it? So I should also join these classes and I can also get benefit. Positive externalities. Social benefits, which derives benefits. If it is negative, that will lead to cost. If it is positive, that will lead to benefits. Okay, so presence of externalities create divergence. Divergence between private cost and social cost. Divergence means there will be gap. This gap is only because of this external or positive. If these two are not there, then in that case, there will be no gap between private and social cost. Okay? Yes, absolutely. Happy person makes others happy. Absolutely. Absolutely, Mancha. We cannot ignore sustainable goals. Externalities include both monetary and non-monetary. That's the problem, Karthik. If you can go for valuing it in money terms, then in that case, half of the problem is sorted. Monetary is lacking. That is why government has to intervene through taxes, through incentivizing. People don't realize, no? So that is why. When monetary, they take care through private cost. But who is bothered about this non-monetary part? So it is a combination of both. Absolutely right. So externalities basically are because of the non-monetary component, Karthik. Because of non-monetary component, because it becomes difficult to quantify, no? That's a problem. Okay, so negative production externalities aapko samajh mein aa gayi. Social costs will be high, isn't it? When we talk about production externalities are negative, social costs will be high and private costs will be less. So we have shared that chemical industry, production costs will be less, so private costs will be less, but the impact on the society will be more, so social costs will be high. So social costs will be high in the case of negative production externalities with compared to private cost. That is why you see their price is low, isn't it? Because इनका private cost कम है, so they can sell at low price. But the social cost is huge, which they are not going for monetizing monetary values. They are taking care about monetary terms. इसीलिए तो polythene bags इतने मिलते हैं market में, despite being banned, because the private cost is too low. And that makes them to go for producing because the price is low. They are not bothered. And the social cost is huge. So it leads to, I've already shared, if the private cost is less, your marginal cost will be less. You can produce at a lower price. Lower price of goods means your profit goes up. Your profit goes up means you lead to more overproduction. Overproduction means the social cost will increase. Companies which are not practicing pollution norms, which are not having pollution standards in terms of machines and equipments, unka obviously cost will be less. Cost less means their price will be less. Price will be less means their margin will be less. Profit, they will be gaining more. And if they gain more profit, obviously who doesn't want to buy from them at a low price? So sales higher, profit higher, but loss to the society. So negative production externalities, okay, negative consumption externalities. What will happen in the negative consumption externalities? Social benefit will be less, private benefit will be high. Just as we spoke about people talking about listening music at a high pitch. They enjoy, but society, it suffers. It suffers. That's about negative consumption externalities. Okay. So that is why government has to intervene. I hope it is clear to all of you. So why government has to intervene? Because the society does not know the producers of negative externalities. The one who is staying across the river doesn't know who is the one who is polluting it. That is why government has to impose taxes on that fellow who is into this chemical industry, that you are emitting pollution, so you have to pay the price for that. Once you impose tax on them, the price will go up. Price goes up means profit margin will reduce and overproduction will reduce, isn't it? So that is how it helps. It is very difficult to establish, like Karthik talking about divergence. Shinjiri, divergence is divergence from social cost to difference between social cost and private cost. Divergence. Agar private cost is not equal to social cost, that is divergence. That is divergence. If these two are not equal. If these two are not equal, that will lead to externalities. I'm sorry, externalities. Okay, so marginal private cost, if it is equal to marginal cost of production. So basically, what is marginal cost? Marginal private cost, marginal cost of production. What is marginal cost of production? For additional unit of good, how much cost you have to incur. So suppose polythene bag manufacturer, for each additional polythene bag, the fellow has to go for 50 rupees. So this is the marginal cost. ये इसकी private cost होगी. Okay, so marginal private cost and marginal cost is same. What is marginal external cost? Marginal external cost is change in the total cost with additional unit of good produced. So this fellow producing polythene and the impact on others. What is the cost? That is the external cost. So cost on the others. And what is marginal social cost? Cost on the society. So what is marginal social cost? Marginal social cost is marginal private cost plus marginal external cost. If there's no external cost, then in that case, marginal social cost and marginal private cost will be same. This external cost is what? Externality. Okay, so this marginal external cost. If it is not there, if marginal external cost is 0, then in that case, marginal private cost will be equal to marginal social cost. That means there is no externality. Okay, so this is how it works. So marginal private benefit, I've already told you about. Marginal external benefit, we have shared example of ICI classes. To be happy. So aap khush hain, and because of you are happy, others, you always spread positivity, and that makes people more happy and they contribute more. So good boss in the organization knows about that I have to practice ethics. I have to be neutral in terms of deciding about policies and others. So all employees will be happy. All employees happy means they'll work more. They'll work more means they will be contributing more. Contributing more means company ka profit up and up jayega. They'll gain more and more. External benefit. Company gain means investors will gain. Unke liye dividend milega. So they'll get dividends. They'll get more returns. So everybody is going to gain through that. So private benefit is of the boss, and external benefit is to employees, to other stakeholders. Everyone they gain external benefit, and that results in social benefit. If external benefit is equal to private benefit, then that if private benefit is equal to social benefit, then there's no external benefit. As simple as that. Okay. So this is the concept. I hope all the terminologies are clear. So for the condition of optimum, we said about failure. What leads to what leads to market failure? Market failure is if, what's up? Okay, so market failure is when we say about the marginal social cost is equal to marginal social benefit. Means cost is equal to benefit. That means it is efficient and optimum level of output. Price is correct and output is optimum. If this is a scenario, there's no probability of market failure. If you see any deviation from this scenario, if these two are not equal, that means there's market failure. Okay, so we can see from this example. Gap. Yes, Srinjini, gap. Yes, you're right. बिल्कुल मार्केट फेलियर का रीजन एक्सटर्नलिटी है, राइट? हाँ बिल्कुल हो सकता है, कैन बी पॉसिबल कार्तिक. Social cost is more than private cost. Possible, definitely. Can be possible. So, in case में marginal benefits will be more. Okay, then you can see here, this is about negative production externalities and loss of social welfare. Okay, so you know the basic concept now. You understand this is marginal social cost. Let's go first with this. Let's take example of polythene only. Okay, polythene bag. I'll change the color. Okay. So you can see this is marginal private benefit. This is marginal private benefit. Let's take this equilibrium first. So at this equilibrium, polythene bags produced is, let's say, 1,000 units. Okay, so 1,000 units of polythene bags are produced. Let's say the price is 50 rupees per unit. So price is 50 rupees, 1,000 polythene bags produced. Okay, so this follows, this is the marginal benefit of the polythene bag manufacturer. And this is the private cost. Uski cost is equal to price. So the cost is 50 rupees and 1,000 units sold. So 50 into 1,000 will be gain of this fellow, isn't it? So private benefit will be 50 into 1,000. That is what, and this is the position of equilibrium. So how much is the cost? This cost, private cost, is rupees 50. How much is private benefit? 1,000 into 50 is 50,000. Okay, that's what you get, because 1,000 units of goods sold plus polythene bags sold and 50 rupees per unit, that's the equilibrium. But what's the cost to the society? Cost to the society is this. Let's say this is 100 rupees. This price is 100 rupees. P2 is 100 rupees. Okay, so the cost to the society, let's say, is because of this. Quantify agar aap kare, polythene bags going into earth crust and making impact. Let's say it cost to 40 rupees or 50 rupees. Okay, so social cost is 50 rupees. But in this case, 50 rupees is the social cost. Is this fellow paying 50 rupees? The fellow is paying only 50 rupees, isn't it? He's not paying 100 rupees. He's paying 50 rupees and he's producing 1,000 units. Now, so what is this? What is this SE? What is this SE depicting here? What is this depicting here? It is depicting that marginal social cost is greater than marginal private benefit or marginal private cost. Marginal social cost is greater than marginal private cost. That means it is leading to what? Negative externality. How much is negative externality? SE. And who is paying the price for this? Those people who are consuming polythene bags, they are paying. Apart from that, those who are not using it, they are also paying the price for it. So this is the loss in terms of social cost. Now, suppose government says that since you are going for the social cost, so your price, you will be imposed tax of 50 rupees on each polythene bag. Now, since government has imposed that, now the price has gone to 100 rupees because 50 rupees tax has been imposed and 50 rupees was the private cost. Now the price goes to 100 rupees, equilibrium shifts from E to EI. Once the equilibrium shifts from E to EI, what happens to output? Output reduces from 1,000 to 500 units. Since the output reduces to 500 units and it shifts to EI, you can see that now at this point EI, marginal social cost and marginal private benefit is equal. That means there is no externality. So ideally, this polythene only 5 units because the fellow can produce at 50 rupees. And this overproduction. And this, what government has done, government has imposed taxes which escalates the price from 50 to 100 and that reduces the production from 1,000 2002 triangle. So what is this triangle depicting here? What is this triangle is all about? This triangle. I Y, then this is what? This is negative external. Okay, so this welfare loss. Please share. What do you mean by public good? Public people. Okay, so different services we are on. Everyone is going to take care about they can take benefit of it. It's public goods. Examples: vaccination, public good. Polio drops give in India. Public sanitation goods are there. Welfare, after social welfare we have shared that शो हो रहा है क्या? One is going to use it, impact will not be getting vaccinated. Okay, so public sanitation, it is non-excludable. Non-excludable means I cannot say that A use karega, B nahi use karega, or these set of people will use, other set of people will not use. Non-excludable. So it is non-excludable means you cannot go for 10 excludable. These are public goods. Okay, they are non-rival. Non-rival means if A is using, if A deprived of it, or B will be consuming less of it. So B will also get that much, and A no reduction. So two students studying in, I don't know, public school, then in that case it doesn't mean A studying A. So non-rival. So public good की characteristic skill also quality time. So that's about, and if A is enjoying, that doesn't mean B ka enjoyment non-rival. It's basically Park is used as individual unit. And what is the free rider problem? Can we share this after break? Students are fine. I want to discuss about technical problem related to audio and video. Hello. Okay. Okay, so I hope what we have shared is clear to all of you. नेट का इशू था, but I believe it is clear to all of you what we have shared till now. कहीं कुछ मिस तो नहीं किया आपने? I hope now it is okay. So, okay, basically what we have shared about public goods. So basic difference between public good and private good, what is the basic difference? So when we talk about public goods, you can see here, public goods are the goods which are provided by the nature or government for free use by the public. Okay. So normally free, yes, some charges they go for it, but normally free जो होते हैं वो pure public goods होते हैं. So free or the nature of the good for free use by the public, and private goods are the ones which are manufactured and sold by the private companies. For example, anything you buy in the market. Okay, so you buy chips, you buy cookies, you buy bread, you buy milk. Everything is by the private company and they produce because you want to consume that. So that is about private goods. So private goods are by the private players. It can be by government also, but it has a price attached to it. So those who can pay the specific price, they only gain through that. Okay. So private goods. What else is important in private goods? Private goods are normally manufacturers which are there, but when we talk about public goods, it's by government, catered by, it's given by government. And there is, in the case of public goods, normally there's no direct payment involved, but in the case of private goods, when you buy something, you have to pay the specific price for it. Okay. अच्छा, graph फिर से बताएं आपको. Okay. Okay, I'll tell you the graph. I'll explain the graph once again. Wait. Okay. Private goods समझ में graph again. Okay, I'm sharing this graph again. Okay. So we have taken this example here. We are talking about a polythene bag manufacturer. For this polythene bag manufacturer, let's say this price is 50 rupees. This is 1000 rupees. यहाँ तक आपको clear है? 1000 rupees. Okay. So this is the 1000 rupees, 1000 units of good and 50 rupees is the price. And this is the position of equilibrium. So at this position, the producer is producing 1000 units of good at 50 rupees. Marginal private benefit will be based on cost and the returns which he will be getting or she will be getting. And what is the marginal private cost? Marginal private cost is equal to 50 rupees. Uska cost at 50 rupees. And let's say the fellow is gaining 1000 into 50. So that's the gain here. Okay, so that's the sales figure and this is about the cost figure, marginal. And for additional unit, let's say for 1 unit, the fellow gets 50 rupees only. Let's say 50 rupees only for additional unit sale. Okay, so additional unit is 50 rupees and here additional cost is 50 rupees. Or let's say 30 rupees. So 30 rupees is the additional private. One second. Okay, so let's say that the private cost is 50 rupees and the fellow is selling at 60 rupees. I should make it 40 rupees. So it's selling at 50 rupees. Okay, so selling at 50 rupees and the cost is 40 rupees. So 10 rupees the fellow is gaining here for each this sold. Okay, and then marginal social cost to the society is, let's say, 60 rupees. So his cost is 40 rupees and this additional cost is this 20 rupees. This 20 rupees is borne by whom? By society. But the fellow is not paying for it. And this is negative externality because the cost is high and the benefit of this fellow is more. So marginal private benefit is greater than marginal social cost. That means here the cost, this is leading to externality, and which externality it is? Negative externality. And this negative externality is equal to how much? SE. Okay, this is negative externality. Now see, government says that this fellow is producing because the cost is less and the fellow is gaining. So let's go for imposing taxes. So 20 rupees tax imposed. Now once the 20 rupees tax is imposed, in that case, what happens? Equilibrium shifts from E to EI. And once the equilibrium shifts here, the price goes up to, let's say, 80 rupees. Now, once the price goes to 80 rupees, then in that case, what happens? The output reduces. Output reduces, let's say, to 500 units. So output reduces, price goes up. Now, price goes up, output reduces. This triangle which you see here, this triangle is what? This triangle was social welfare loss to whom? To society, because the price was low. Because the marginal private cost was less than Jesus means price goes up. Price goes up means output will reduce. Output reduces means this loss will get over. Okay? Public goods and rival goods. Okay, I'm showing that. Yes. This is clear. So public goods are basically non-excludable goods. Non-excludable goods like India Gate and other places you have seen. Anybody can come, anybody can sit, anybody can relax. Okay, so that non-rival. If one is sitting, that doesn't mean that other cannot sit and enjoy, and the opportunity they lose. So they can also get that fresh air. They can also enjoy that green. They can also enjoy that environment. So that's about non-rival. One's gain is not lost to the other, non-rival. One is accessibility doesn't mean other cannot access. Okay, indivisibility. You cannot go for breaking that in different units. Chips aap lete hain, you can take one packet. Cookies, you take one packet. You can take two packets and so on. It is individual unit. But here in this case, it is indivisible. You cannot divide India Gate. Okay, so that is indivisibility. What happens here? Free rider problem. What is free rider? This is a common problem in public goods you find. What is free rider problem is that it's India Gate. You are not supposed to pay entry tax for there or entry ticket for that. So anybody can go and sit and you can spoil over there. You can eat, you can throw here and there. Then in that case, what's going to happen? Because it is free, no? So nobody is bothered about. So why should you be bothered about? So what happens in that case? It leads to overuse. Sometimes people misuse that place. Sometimes people go for exploiting that situation, and that is a free rider problem. So free rider problem normally arises for public goods, something which you get free that makes you to misuse it to the extent. Okay, so normally it happens in public goods which are available. So public parks is one example. It can be for another example which is quoted. For example, I say WhatsApp available to you. Which people are using it to the extent sometimes one is using doesn't mean that other cannot use it, and the factor which is leading to that, and sometimes it happens that people may misuse it to that extent, but that's a different story. We are talking about from the public good concept. Okay, so public good, when everybody can consume, when no one can limit anyone else consumption, you cannot go for limiting another one. When someone has to produce and maintain the resource. So in this case, public parks are there. People are misusing it. People may overconsume it. People may exploit the situation. So government has to maintain it. So government takes care about it, maintaining it. They'll put street lights. They'll appoint police officers. They'll take care about some cameras to monitor that some wrong activities are not happening over there. They'll install dustbins, they'll install those, they'll appoint somebody, gardener and others to clean it on a regular basis. So this is what they take care about. So government has to take care about to maintain these resources, because private players will not do it. Okay, so to maintain it, like the way swimming pool is taken care by certain set of people. So similarly, if it is a lake and everybody has access to it, so nobody will be bothered about, people will misuse it. So somebody is there to take care about that. Government has to take care about in such cases. Okay. Yes, local transport also. Absolutely right, Hitesh. Local transport also. water, air to breathe. Yes, people misuse it to the extent the factors which are almost freely available to them. So no business in this case. You think that like monuments, public monuments, you see public monuments, nobody is bothered. So you have seen Taj Mahal, negative externalities, industries which are close to Taj Mahal, the color of the Taj Mahal has become pale over the years because of the from white to pale. It's because of the emission, industrial emission in city, which is adversely affecting. So negative production externalities are making impact on Taj, and that is because of that people don't value public heritages. So government has to take care about that. Free rider problem, basically something which you have access to free, which and no private player is voluntarily ready to take care about those services. So in that case, it leads to government has to take care. So no business would voluntarily produce goods or services under these circumstances because you cannot charge price and you cannot. That's why you see in government, in remote rural areas, private hospitals will not be there. Only public hospitals are there. Because who want to cater over there when you are not getting, patients are not able to pay the price for that. So that is the problem. So free rider problem happens when something is available from the government, people misuse it. आपने देखा है public buses, how people misuse it and other places. So they have to appoint certain players to avoid this free rider problem. Okay. So either the shared resources will not be provided. One option by the private players are that they are not going to give it. So government has to take care about it. And if government has to take care about it, they have to go for taking care about by assigning certain people to take care of it, or they have to go for some tax. So if you use this thing, you have to pay this much tax. And once you go for that kind of a measure, then the free rider problem can be sorted out. Okay. So what is the basic difference between public good and private good? I hope you understand private goods are goods which are given by, where you have to pay the price, and that is driven by profit motive. If consumers demand, then only it will be produced. If they are not demanding, but public goods are something, clean air, schools and colleges, hospitals, roads, these services which are provided, parks, which are provided, traffic, street lights, traffic lights, which are all provided by government. So that is about no direct payment is involved here. All people can use it. So it's not like only rich people can use or only poor people can use. They are treated at par. Anybody can go to public place, they can enjoy, they can relax. But in the case of, if you go to water park, if you go to these places, these are private goods. Those who can afford to pay, they can only enjoy that. So that's the price involved, and that is the difference between public good. In the case of availability also, it is available readily in the case of public good. But for private goods, there are certain restrictions. Some people can enjoy, some people cannot enjoy because of the price component, because of the accessibility component. Okay. And it depends on quality also varies. Higher the price you pay, better the quality you get. But in the case of public good, the quality remains same. So it is by social choice. So schools and colleges, hospitals, flyovers, roads is by social choice. They want to, but private goods are by consumers' choice. If they want, then only they will be produced. Motive is profit. Here the motive is growth and development. Okay, so these goods are not, opportunity cost is not there. If A is using, B can also use it. So that's not there. But in the case of private goods, some people are using. So if you want to see your movie, if it is houseful and you want to go, but you cannot enjoy because already people have taken that seat. So you cannot enjoy that. So that is the factor. So basically public good and private good में आपको basic difference करना है, excludable है, rival है or not. Okay, so the price is involved. So that's the basic difference you should understand. So non-excludable होते हैं public goods, anybody can enjoy. Private goods are excludable. Examples you can see here: police services, fire, rivers, all are public good. Clothes, you buy clothes, you buy cosmetic products, you buy footwear. You buy you buy stand to here. This is core difference is about excluded people, they'll go for buying it. As if you and test for a river, then other people can go there. You cannot other cannot give it. Like cinema halls, other people can go to one. You can restrict them in terms of price. PVR hai. PVR. If there is one PVR, there's another PVR. Club goods are excludable, but they are non-rivals because you get similar services at other places. Okay, so for example, I say schools. Schools are about schools, public schools. Public schools means private schools which are there in the market. So these private schools, what do? They give same CBSE curriculum. Same CBSE curriculum. You can pay the fee for that school, so that is why you're going in that school, and the other child will go in the other school. But non नहीं पढ़ेंगे या ICSE curriculum नहीं पढ़ेंगे with respect to so excludable and non-rival club goods. Okay, so club goods can be private parks because बहुत सारे health clubs हो सकते हैं. So these are all club goods. Okay, then pure public good. Pure public good is that which is non-excludable and non-tribal. Pure public good. Pure public good is non-excludable and non-tribal. People are working at borders. I'm secure. You will have different services you will not get. So that is known as pure public good. Okay. So difference is clear. Okay, so this is the concept. Pure public good and impure public good. If you talk about pure public good are non-rivals. Other people just say they roads, public roads. So roads are there. So many if many people that be there, so other people will not be able to use if the road is highly congested by cars and others. Rivals are the concept of excludable and rivals. Okay, excludable and rivals, that you should understand the core difference here. What is quasi-public good? Quasi-public good, what do you mean by quasi-public good? Quasi-public good means good characteristics are there. Okay, so that is known as quasi. Quasi means having components of both public good and private good components. So these include partially excludable and partially rival and partially diminishable and rejectable also. For example, I say toll tax and others, they go for taking it, isn't it? So they restrict people. Certain people can come. Those who pay toll tax, they can only go for toll charges. Is quasi-public good. So toll charges, which restricts flow of traffic and reduces congestion. So that is known as, but it increases cost. That's the quasi-public good. Introduction of new technologies, smarter payment systems, which you have, that is about on your car, you can get that fast track if you get that. So those people who pay the price, they can easily move faster. Those who cannot afford to pay, then they have to wait for paying. So that's the difference. So impure public good, what do you mean by impure public good? Impure public good are goods which are not exactly free, and there is some component of partial rival, but benefits can be derived. So we have shared about impure public good. Impure is commonly by all school you are there are excludable. Okay, so that's about government school. These are impure public goods. But toll bridges variable. Toll bridge is variable because you pay the price, and if you are using it, then only you can go. Though it is a public good, but they can fix a price, and so that is about the quasi-public good we have already shared. What's the problem again? Okay. So education is public good, and chartered accountancy program we have already shared, which makes you competent enough, which you gain knowledge, for which you people pay some price. But in the case you gain knowledge, accounting knowledge, you gain consultancy services, you gain knowledge in terms of policy recommendations, you can help others. So that is how GST recommendation chartered accountants can go for, have made it and contributed. So this is about benefits which you pass it on. So it's a private good, but the benefits which you can pass it on is public good. It has features, it has characteristics of public good over there. Okay, so that's the difference in case of quasi goods. Quasi goods are basically private goods, but it has features of public good because you can contribute, which can be non-excludable in nature and which is not rival in nature. The next concept is common excess resources. So we are talking on our common excess resources. What is common excess resources? Common excess resources is the concept like rivers, like forest, like ecosystem which you enjoy, open sea. They are rivals, but they are not excludable. Rivals in the sense that if more and more people are going to use it, it will deteriorate. But you cannot exclude people. So the common access problem arises because all people can use it, they may misuse it, and that can lead to problem. So what government has to do? Government has to go for defining the property rights here, what people can, to what extent they can use it. If they go for this is the time during which they can use it, and this is the price they have to pay for that to make it more efficient in the nature. Otherwise, these kind of problems. So you see, you have a Corbett National Park. So why this Corbett National Park is there? Why these national parks have been created? These have been created because of the common access problem. People use it in surplus, they misuse it, and that creates a problem. So government can go for fixing certain riders to make people use it efficiently. I don't know. Am I audible or not to all of you? I know students are saying that they cannot hear me, they cannot see, video is stuck. I don't. अभी भी बोल रहे हैं. Okay. So we have discussed about common access problem. Common access problem, what is common access problem? It happens because it is commonly available. And since it is commonly available, then in that case, people may lead to using it. Like we have already shared, river hai, forest hai, areas where people can easily go to, and they can indulge in overusing it. So that creates a problem in common access. Okay, so common access itself means freely available, and that leads to overutilization of resources. So overutilization, overused, and this leads to tragedy of common. So we are going to share tragedy of common. This is a very important concept. Since things are easily available, you cannot exclude, but they are rival in nature. That leads to what? There is no parameter through which you can restrict people. So some people misuse it, and because of that, others may suffer. So this was example quoted here was in terms of common means basically common area. So they took example of shepherd. So this shepherd goes to the field, common field, where he finds green grass to flock to graze on for taking care about his ships and taking care about making them have diet. Okay, so the fellow goes there, shepherd goes there, and make them graze on the common field where there's green grass. Now, if each and every shepherd will start doing it, what is going to happen? The green belt will become dry. And this problem arises because where they see more green, all shepherds will be going. And this will create a problem, overconsumption problem. So that is known as tragedy of the common. Tragedy of the commons, when there is easy accessibility, that leads to overconsumption, misuse of resources, and neglecting because of the personal gain, they neglect gain to the society, to economy, to country. Okay, so that's about cutting of trees. People go for cutting of trees in the residential area because of the urbanization is going up. So their interest is to go for cutting trees and make houses at a faster pace. And because of that, all players start making houses at a faster pace. And that is why that green belt gets eroded totally with skyrocketed buildings. So this leads to overconsumption and depletion of the resources. This is known as tragedy of common. And this happens because resources of land is limited, green area is limited, and overconsumption leads to, and you cannot exclude people, and that is why overconsumption leads to deteriorating the benefits which country can enjoy. So tragedy of common includes imposition of private property. That's why government fix up rights, property rights. Government goes for government regulations. Government go for restricting entry to that area so that there should not be tragedy of commons, which happens because of overconsumption, because of non-excludable but rivals in nature. Things like green area, places which is gifted by God in terms of nature, and people are misusing it. But these resources are scarce. Okay, so this is tragedy of common. Then the other concept is global public good. What do you mean by global public good? Global public good, best example is COVID vaccine. All over the world, countries are taking care about vaccine. So, and it is beneficial for all. Nobody is excluded. And at the same time, if one is getting vaccinated, that means other is deprived of it. So that is about a global public good. So they have declared, and countries are sharing it with others also. So there's no restrictions in terms of A can get, B cannot get, or A country can get, B cannot get. So that's about global public good. So public goods with benefits which are there in terms of vaccine, it can be across the world, which you can see is global public good. Negative can be Ukraine and Russia crisis, and because of that, countries are suffering. The impact is there, or I would say that greenhouse gas emission. So countries going for using overconsumption of or leading to carbon emission, high level of carbon emission because of overconsumption and a not defined scrappage policy, and then disposing of electronic waste like that, resulting in high emission, depletion of ozone layer, is about negative impact to the entire world economy. That is why you see there's a sudden change in the climate, very hot and very cold. This is happening because of the global negative impact, cost component. Benefits example is about COVID vaccine all over the world. So public good with benefits, public good with cost. Okay, international trade can also be global public good. So countries, as I quoted example about international trade because of, you say about Sri Lanka crisis, you talk about UK, Russia crisis, the oil prices impact on India, or the petroleum prices which are going up 105 and plus. This is the cost component, international trade. But countries like when we go for BRICS, when you go for SAARC, when you go for ASEAN, this is about taking care about facilitating trade. When you go through WTO, so then it is case of benefits, trade facilitation, international financial structure. So IMF defines, World Bank take care about if COVID cases are increasing, if there is some countries which are suffering because of food, shortage of food. So all those measures taken by World Bank, which helps all countries across the world, is also public good. Knowledge which you get it through World Bank, through World Economic Forum, to all people across the world, that's about public good, which anybody can have access to. If one is gaining, that doesn't mean other will lose. So these are global public goods. Similarly, communicable diseases is minus. Okay, communicable diseases are minus. Yes, museum can also be public good. Absolutely right. So communicable diseases, and I've already told you about global good is impact is there in terms of greenhouse gas emissions. So if there are Greenhouse emission is increasing over the period of time, and it's leading to global warming. All across the world, people are going to suffer. Scientists are working day and night for this. Countries are working to overcome this. So the social cost can be reduced through taking measures, due measures, promoting green, going for a reduction in carbon emission. So that is how the cost can be reduced. So cost factor can be reduced, and the risk component can be reduced if these externalities are taken care about, negative externalities of carbon emission. So it is required to curb greenhouse gas emissions, and scientists are working for it to overcome this climate change problem or to reduce the impact on Earth. And there's a cost involved for this. Which cost is this? External cost. This external cost escalates social cost. So the social cost goes up. I'm sorry, I write again. So if the greenhouse gas emission goes up, if the greenhouse gas emission goes up because of this, external cost will increase. And this external cost leads to higher social cost. And we have shared this leads to what? Loss of welfare. To overcome this, what is required? To overcome this, it is required to work on research so that the cost can be reduced. Okay? So this is important to understand. So externalities, you can take care about externalities in terms how government takes care about controlling externalities, taxing polluters. Those who pollute, they have to pay tax, carbon taxes, plastic bag taxes, subsidizing to promote, this is to discourage negative externalities, production externalities. This is about subsidizing household for non-polluters. That is about positive consumption externalities. Isn't it? Non-polluters, to give them subsidies. So you go for green, we'll subsidize you for promoting green. Giving grants for home insulation. So those who go for green, taking care of environment measure when they construct houses, they get subsidies. Government goes for selling permits so that those who have permit, if they go for promoting green, they will be having credits in their point account. And those who will be emitting more green, they will be debited. So those who have plus, they can transfer it to the minus. And this is how they can control pollution. So permits to pollute, specific number of permits are given. You cannot go for pollution beyond that limit. If you go beyond that, you will be penalized. And you can exchange these permits. So polluters have to pay compensation for polluting the environment. Okay, so there are different measures which are taken. Sometimes government goes for promoting positively to take care about these things. So government says, do not go for burning crackers, and then it helped them, people understand this, so they go for green crackers. So something like these kind of activities which can help. You can find n number of articles from Hindu and Business Line related to this market failure. Okay. Impure public goods are, which are all goods are impure public goods. You cannot find pure public goods. Pure public goods are free. There's no rival. There's no excludable. But in the case, what happens normally, there is some component of rival, isn't it? When you go for overusing it, then in that case, the others will be deprived of it. So you cannot say it is completely non-rival. That is what about impure public good. Okay. So now we are talking about that. What are the major factors? And many questions have been asked related to this. So this should be very clear to you people. We are also running short of time today because of technical issues and many things. Anyways, I hope you have understood this. So basically, we are talking now about why there is lack of information leads to market failure. Okay, why lack of information? So if there's lack of information between a buyer and a seller, that may lead to market failure. So one is known as asymmetric information. Asymmetric information basically means what? One party has more or better information than the other one. Who are these two parties? One is a buyer and other is a seller. Let's say it's related to mutual funds. Okay, so this is HDFC, AMC, asset management company, selling mutual funds. Okay, so they are selling mutual funds. Now, if in case the buyer wants to buy mutual funds, and what AMC is saying about they are talking about that you should go for investing in risk prone. But this fellow doesn't realize that going for the risk is, he should not go for risk, he should go for less risky product. But is relying on this and going for investment here. In the long term, this fellow may lose his money because of the lack of information, because he's not aware about the market or she's not aware about the market. And they're simply relying on the seller. So the buyers having lack of information about the product where they are investing, and seller goes for selling it, which makes buyer lose. So this is cause of imbalance of power. For example, landlord knows more about its property than tenant. A borrower knows more about his. So best example can be banker. Okay, so bank and the one who goes for taking credit. So let's say that this A is a customer and B is bank. Now this fellow goes to the bank to take credit. Okay. And says that these are my books and I'm doing very well and you can see my books and according to that you give me credit. And bank believes and give him X amount of money. Now the books which he has shared or she has shared are not 100% accurate. But bank relied on this fellow and given loan to this fellow. Tomorrow this fellow may not be able to pay the complete amount to the bank. And this has happened because of the lack of information between the two players. So this fellow, bank is going to suffer because of not correct information given by A. Okay, so it's important to understand. So if this is not going to happen here, bankers will lose and they'll have more NPA in their accounts if they cannot see the risk while lending it to A. And this happens because of asymmetry of information between buyer and seller, lack of information. So mutual fund, when people go for surgery, so doctors, they say, no, it is very much required to go for knee surgery. And the fellow doesn't know it is actually required or not. But the doctor says you have to go for it. Reason being, you are not able to walk. Maybe through yoga or something you can get fit. But the doctor wants to earn because the fellow is an orthopedic and want to go for making you go for the surgery. And you rely on the doctor and you go for it. This is asymmetric information, which leads to market failure. So there's a cost involved because of the ignorance, which leads to wrong decision making. So the lack of awareness among consumers may lead to loss. That is about asymmetric information. Okay. So sometimes when you go for taking a house on rent, the owner says, see, my house is so good, and they go for whitewash and they do everything. And superficially, they make it so nice and you believe in that. And once you start staying, you come to know that there are n number of problems. And since you've entered into agreement, you cannot go against it. So you're stuck. That is market failure because of the lack of asymmetry of information between a buyer and a seller. Okay, so that's about asymmetry. Next is adverse selection. Adverse selection is about when buyer and sellers, they have not correct information, that leads to promotion of bad products. Okay, so I'll give you one example here, which is very common, which is they ask you in the question also, Lemon's problem. So let's say that there's insurance company, okay, but they have taken example of car. So I'll take example of cars only. So let's say there's a car dealer, and this car dealer deals in second-hand cars. Okay, so these second-hand cars, the car dealer deals in second-hand cars. So there are different category of people, those who want to sell their car to him. Okay, some people car is in good condition, and some people car is in bad condition, is not so good, bad, and some maybe not so good. Okay, so there are different category of people. Now the car owner knows better than the car dealer about his or her car, isn't it? So what happens here? This car's owner, whose car the fellow has met with an accident and has got it repainted, now goes to the car dealer and says that I want to sell my car. So the fellow is not aware about that something had happened with this car and goes for paying him good amount of money. Now once the car dealer has got the car, and when he has realized that this car was not in a good shape and he has given him more money, so next time this fellow goes and asks that I want to sell my car and my car is in a good condition, so you pay me this amount. So let's say this fellow got 50,000. This fellow says I want to get 60,000. Just an assumption. But this fellow, car dealer, has already suffered because of this bad car which he had got at 50,000 rupees, which he had to pay for 50,000 rupees, and the car was not worth 50,000 only. Now what he'll do, he'll think about that this car is also bad. So he'll tell him that I want to buy 40,000. So what will happen in this case? All those who are having bad cars are not so good and knows readily selling it because he knows the car is. So what happens? But this fellow will not sell because he knows his car at 40,000. So this is a good car. This is a bad car. So this is a very bad car condition. So good car sellers will not be there in the market, only bad car dealers. The market is flooded with bad cars. What is going to happen? One point of time, buyers or good sellers there was asymmetry of information between the in the marketplace. Car owner knows more than the car dealer. And this leads to what market flooded with bad cars, and the good car dealer will lose the market. This is the concept. I'll give you another example. Okay. Here, what is happening? The car 11 and pair they have compared. Uh, let's say this is clear to all of you, no? Insurance, contact say health insurance. So premium on the basis of, and who will take more claim? The one who is unhealthy. Isn't it? Healthy people will go for taking less claim. They fix 40 customers for health insurance. 10 of them are unhealthy. Market. So since this healthy people are out of the market, only unhealthy will be there. And if more and more unhealthy people are there in health insurance company, then in that case, the probability of claim will be more and more. Probability of claim will be more and more, means premium will go up and up. And once the premium goes up and up, more unhealthy people will be there. So this health insurance company will be flooded with unhealthy people, and healthy people will be out of it. That is a lemon's problem. Unhealthy are lemon and healthy are pear. It may be possible one point of time this health insurance company has to close its unit. This has happened. Why? This has happened because of asymmetry information, lack of information between the buyer and the seller. Okay, so this is about asymmetry information or Lemon's problem. I hope it is you have got the concept of Lemon's problem, very important to understand. So good car and bad car dealer and car owner. Uh, Health insurance with respect to, similarly for loans also it happens. You see loans. So for example, I say that you are a banker and you go for lending to customers. So you have lended to these customers. Now out of this A fellow, if suppose A and B have become defaulters, they have not paid the amount. This made the banker more risk averse. Risk averse means does not want to take risk. What will the banker will do? Will fix up higher interest rates. for loan. And suppose E and F wants to take loan. These are good borrowers. These are good customers. But since these two have defaulted, so the bank will go for increasing the interest rate. And if the bank increases interest rate, these good borrowers will say, why should we take loan when we can get it in the market at a lower rate since you are charging high interest rate? So we don't want to take. So E and F will be out of the market. A, B are defaulted and C and D will also default. Then in that case, the bank will be losing. So all good borrowers will be out of the market. Only bad borrowers will come here. Because for them, this interest rate will also be less as compared to the default they can do in the market. This is a Lemon's problem. Okay, so it's clear. Asymmetric information leads to Lemon's problem. Lemons are bad and pears are good. And the market gets flooded with bad and the good ones are out of the market. Okay. Okay, so the next thing which we are talking about, hazards, moral hazards and market failure. What do you mean by moral hazards and market failure? When sometimes it happens that companies, they say that we are going to give you return of 15% and you invest in this. And you go for relying on that. Morally, they are bound to tell you that we are saying 15% return you will get. But in the case, if market will not go to perform like this, your return may go down to 5%. But they are not disclosing this information from you. This is moral hazard. Morally, they are bound to share that, but they are not sharing it, which is resulting in problem to you. So moral hazard basically when the actions of one party may change to detriment of another after financial transaction. You have already entered into financial transaction and then later on you come to know that what they said about that the risk is less and return is for sure, but the risk is higher and the returns will be low. So that is about the concept of moral hazard. Another example of moral hazard can be market failure can lead to is that there are certain group of companies which hire people and tell them that see, this is the profile we will be offering you and this is the salary we will be offering you. But once people they join, the profile suddenly gets changed. That is a moral hazard, which what you have said about, and the person who has been hired for that has not been given that particular job, and you are giving something else that leads to stress, that may lead to adverse impact, but the company was morally bound to share the right kind of information. These things leads to market failure. And that is why Government of India defines what? Government of India defines labor norms, labor laws, so that no one can go for misusing this lack of information or ignorance or awareness, lack of awareness amongst people. Okay, so moral hazard occurs in employment relationship, employees and management, not being transparent in recruitment, selection, promotion, performance appraisal, and making people stuck because they cannot find another job. So morally, this is wrong. When firm cannot take care about employees and managers, there's a chance that sometimes managers are corrupt. They get salary, but they are deceptive in their approach. They do not share right kind of information, which leads to failure. Their selfish interest is over and above other things, and that creates problem for the organization. These are moral hazard. So it can be financial transactions. It can be related to recruitments, HR. It can be related to the products and services which you cater in the market. What you say and what you give to your customers is totally different. That can also be moral hazard. So such kind of market failures where the producer or a supplier wants to gain at the cost of asymmetry of information, that is known as moral hazard. Okay, so these are the things we have shared today. I will do just recap fast so that you know about what exactly we have covered today. See, this chapter is about market failure. We had discussed about concept of market failure. Market failure, what exactly is market failure? What are the sources of market failure? How negative externalities leads to loss of welfare, loss of people and society. What is the drawback of public goods? Why it leads to free rider problem? Why it leads to common access problem? And how government overcomes free rider problem by imposing some taxes or taking care about maintenance and other parameters. How asymmetry of information leads to disruption in the market in terms of Lemon's problem. Okay, so asymmetry of information leads to Lemon's problem, very important. We have shared about it. You can understand this with respect to the moral hazard. There can be problem of moral hazard. Then we have shared about the externalities. So you can understand the basic externalities which are there. It can be related to production. It can be related to consumption. It can be positive. It can be negative. So this is what we have shared. We have shared public goods. Public good code is about they are non-excludable, they are non-rivals, they are indivisible, they face problem of free rider. How public good and private good are different. What is the concept of club goods? What is pure public good? Pure public goods which are non-excludable, non-rival. Anybody can use it. What do you mean by which are there? So they are depleting day by day because they are rivals in nature. Okay. So impure public good we have shared, they are partially rival and congestible. So impure public good, when you go for using road, there congestion that leads because of the overconsumption. So that is the problem. Quasi-public are, these are private goods but have characteristics of public goods. Okay, club goods and variable goods we have shared. So you can read and we can discuss in the next class. I believe there were some technical issues. So some of you found it difficult to cope up, but don't worry. I'll upload these notes, and if you find anything not getting, we can discuss in the next class. Okay? Okay, then take care, all of you. Hanji. Yes, yes.